Okay, I want to call the meeting to order. Good morning. As most of you know, I'm Representative Deborah Ferguson from Arkansas and the NCOIL president. First, I want to ask for a motion to waive the quorum. I have a motion. I have a motion, a second. A second. So moved. All in favor say aye. All opposed? Okay, the motion passes. And I need a motion to approve the minutes from the March 10th meeting from San Diego. Have a motion? Have a motion and a second. All in favor say aye. All opposed? Okay, so moved. Before we get started, I just want to thank all of our commissioners for being here. We started this dialogue with the commissioners several years ago, and I said at our opening meeting, we really value our relationship with the insurance commissioners. You know, we function together. We're the legislative part, they're the regulatory part, and we couldn't do it without each other. So we're grateful for this dialogue to really discuss important issues that come before both of our groups. Before I get started, why don't I just let the commissioners introduce yourself and say, you know, which state you represent or where you are with NAIC. You want to start? Grace.
Hi, nice to see you all, and thanks for being here. Welcome to my home state of Minnesota. So I'm the commissioner of the Department of Commerce, which includes our insurance regulatory division. So really happy to have you all and to be host to this excellent meeting. Looking forward to the conversation.
Good morning, Glenn Mulready, Oklahoma Insurance Commissioner, and as I joked with the officers this morning, I am also a recovering state legislator along with a couple of my colleagues here.
Good morning, I'm Amy Beard from Indiana, so it's good to be here today. I see Representative Lehman representing, so nice to be here. Thank you.
Good morning. I'm Commissioner Jim Donlin of Louisiana, and like Glenn, a recovering legislator of 19 years and chairman of the House Insurance Committee for the last 6 of those. Thank you, ma'am.
And good morning. I'm Dean Cameron, the director of the Idaho Department of Insurance, former state legislator, former state senator for 25 years, most immediate past president of the NAIC.
Tom wanted to have a comment.
Madam Chair, if I could just take a moment as a matter of personal privilege. This is the summer meeting, and between now and our annual meeting is Election Day, and it will be the first time in Louisiana that Commissioner Donlin is not on the ballot in a long time. And I've known Commissioner Donlin for decades. We served together. He held office back when I was in the corporate world doing work. He was accessible to people on all sides. He went on to have an unbelievable career that continues today at the NAIC in Louisiana. I said to him yesterday, and I meant it, and I'll say it now, that the day after his term concludes, there should be a statue unveiled outside the insurance department in Louisiana. Jim, we thank you for all you've done and all the good kindnesses you've shown to NCOIL and to me personally over the years.
And really, I've said many times, that's one of the things I value most about NCOIL is just the people that come are just a wealth of information with experience, and I'm just very grateful that we have you to go to for questions and input. I just want to recap the NAIC DC fly-in and the preview of the NCOIL DC fly-in. We try to take a group of legislators every year to meet with our congressional groups or different people in Congress. In October, NCOIL will have its 8th consecutive DC fly-in. The fly-in is a great opportunity for us to meet with members of Congress and discuss NCOIL initiatives, and certainly to continue to express the importance of state-based systems of insurance regulation. Some of the issues that we plan to discuss this year is the reintroduction of the Prohibit Auto Insurance Discrimination Act, the PAID Act, which seeks to prohibit auto insurers from using certain factors in underwriting, such as educational level or marital status. Preserving the ability of the states to regulate state health care via an amendment to ERISA to add a statutory waiver provision, and enacting a long-term reauthorization of the National Flood Insurance Program. I live in a floodplain, so I'm very grateful for that. I said, I don't know what my grandfather was thinking. I sit on the New Madrid Fault and inside a levee. We understand that the NAIC held its annual fly-in earlier this year. Would you be able to please provide us with a recap of that, along with noting the main issues that you discussed when you were in D.C. at your meetings?
Thank you.
Dean, you're up.
Yep, I'm up, and appreciate the opportunity. We had a very successful fly-in. This was the first in the last 3 years, in spite that I pushed really hard last year as president to do it. We just couldn't get it put together with all the restrictions that were in place. We had 30 jurisdictions that attended and 133 meetings, and reported great success as we met with our congressional delegations. We also supported the long-term reauthorization of the National Flood Insurance Program. We'd love to see Congress stop playing politics with it and to have a long-term solution there. We support a vote on the FSOC, the Financial Stability Oversight Council. The insurance industry is the only industry, economic financial industry, who's not represented with a vote on that council, and so we've pushed for that to continue. We promoted and shared our efforts as state regulators to avoid the targeted attacks on seniors with fraud and other means. We also expressed the importance of policyholder protections in insurance receiverships, and shared our experience as we deal with Medicare Advantage and the marketing of Medicare Advantage plans in states. You may know that we regulate Medicare supplements, but we don't have very much authority under Medicare Advantage plans. We believe consumers ought to have that same regulatory protections regardless of the product that they purchase, and so we promoted that. Obviously, we had lots of other discussions. We were also opposing federal preemption of states' rights and federal preemption of state data privacy and cybersecurity safeguards. And then we also, as we talked about this morning, oppose expansion of risk retention groups. We believe that non-for-profits have access to coverage. Our C committee is doing a study to make sure that's the case. And we believe that those non-for-profits need the same consumer protections as anybody else buying, coverage. So, with that, I'll be quick. Happy to answer any questions that you might have.
I guess, and this is always my question after we go to D.C., we go and we have a conversation, but does that lead to any action? Have you seen any action federally as a result of those conversations?
Yep. It does at times. It is, as you know, slow progress in our nation's capital. First and foremost, we, like you, go to cement our relationships with our members of Congress, and also to point out who they can come to in the event that they've got insurance questions or insurance regulatory questions. And so that's a great success, and that leads. But we've often had, we believe on that, for example, on that last piece, the risk retention piece, that was being heavily promoted at the last minute and would have potentially passed had we not done the fly-in and had those relationships and been able to reach out and convey our concerns. Glenn?
Yeah, thank you, Madam President. Just a quick, I guess, additional comment. on that Medicare Advantage piece, and just those state legislators know that, of course, you don't control that, but multiple voices is helpful. That was something I know certainly with my delegation, every single one of them, we hammered on that. We get the phone calls, we get those complaints on Medicare Advantage, and we have to tell them, call the feds, and it goes into a black hole. They don't have the resources. CMS has made the decision now, because as they've checked around, things are kind of quiet. Well, my response to that would be, yeah, they're quiet. It's not during the enrollment period here, you know. Come talk to us at the end of the year. And so, you know, they're going to let it ride and see if that works. However, when the chief administrator for CMS was in front of us like this, I know I jumped in and asked a question about granting us more authority, and she was very open to that, that they'd love to work more collaboratively with us, but ultimately they've not done that, but we want to continue to keep pushing on that issue, because it's a big issue for each of our departments. Thank you.
Sure. Are there any questions from members of the committee or at the table? No? Okay, then we'll move on to the, oh, no. Oh, I'm sorry. Yeah.
Just one quick one, and that is I appreciate that you are speaking up about Medicare Advantage plan as an agent who writes Medicare Advantage and supplements. It's frustrating that the federal government, because there are some national bad actors out there who are putting ads on television with Joe Namath or whomever, and they really are not taking care of the consumer like the local agent would. And we know that if it was in the hands of the state regulators, that would be a very different story. Instead, they overreact and say you must record every single phone call, even if they call to ask you a question, have to keep that for 10 years, et cetera, and actually make it difficult for good people to help seniors. And so I fully support that, and thank you for asking that.
Thank you, Senator. I'm not sure if there was, thank you for the compliment. We worked very hard on it last year and are continuing to work hard on it. We also did a lot of media outreach. I personally ended up doing 2 media events where I was interviewed by over 30 television radio stations across the country, had nearly 40 million views on it, and we focused on Medicare Advantage and the improper marketing and approaches. Most of us who have folks within our departments still try and help to the best of our ability, but as Glenn said, our abilities are limited. And we have seen some movement from the federal government on willing to hand some more of that over to us. They may not be willing to give it all up, but they're willing to give some additional authority, I believe.
Anyone else? No? Okay, then we'll move on to the issue with the travel insurers. And I will say we did invite the General Counsel for of the Sovereign Nation Health Consortium to come to this meeting, and he unfortunately had to cancel. So I think it would be beneficial for us to all hear from them, but I know we all have some concerns about the travel nations and how they're selling insurance products. Nonetheless, we do want to hear from you all. I know at our last dialogue in San Diego, we discussed the work of the NAIC's American Indian and Alaska Native Liaison Committee regarding the insurance issues specific to tribal nations. And we discussed a survey that was conducted by the committee relating to the growing insurance markets and business models of certain tribal insurers. And can you share with us any updates on the work of that committee and the results of the survey, and what, if any, NAIC is doing moving forward on this issue of, and you might summarize it for people who weren't here last time or don't understand the issue of what the tribal insurers are doing.
Okay. Thank you, Madam President. I'll be handling that. I chair the Native American liaison group for the NAIC. And we will be, in 3 weeks at our national meeting, we'll have a presentation in that group on a similar update on what is happening around the state. So you get to hear some of that a little bit earlier. It'll be presented by my legal team. But the Sovereign Nations Health Consortium, for those of you that may not know, is a group out of Utah. headquartered in Utah, and I was disappointed personally, too, that the Mark Echohawk canceled out on that. I would love to have heard anything new that he had to say. He presented to our group. It was in our Portland meeting, so about a year ago, a little over a year ago was that meeting. And this is a group that is selling health insurance to tribal members and non-tribal members on reservation and off reservation. And so Utah has had a number of conversations with them. They have specifically put in writing asking them about the McCarran-Ferguson Act and their response to that. They have not heard from them on that. They have agreed, I guess, with Utah to now back off and only sell to tribal members. Anecdotally, it appears to me from all the conversations I've had with other states and what's happening there is that this group is not looking for a showdown. The state of Washington had a cease and desist in place with them, and on the very last day of that cease and desist, they offered to withdraw from their state, and so I think they're not looking for that legal challenge. But I understand the state of Colorado as well, that they have agreed to withdraw from there. But I met with their executive team personally. They came to Oklahoma, their full executive team, and sat with us, and I asked them similar questions. Their response to me on the McCarran-Ferguson issue was that McCarran-Ferguson was silent on tribes, so therefore that allowed them to go about their business how they chose. So it's just, I'm not an attorney, but it's an interesting legal interpretation of that. So we continue to monitor what's happening around the states. As far as we can tell, they've been selling products only in about 15 states. They're not across every state. I can tell you that in my meeting with them, I asked about future expansion, their plans, and they certainly expected to expand into the life insurance business. They were talking about sort of burial policies, low value for tribal members to offer some life insurance to them. But they believe that they are not held to any state laws as a sovereign nation, and so eventually it will end up in court and we'll have a decision, I suppose, but at this point there is nothing in court at the moment. I'll also tell you from my conversation with them when we met in my office, they clearly misunderstood how the insurance business operates in our country and the NAIC and getting licensed in each state and capital requirements, because I asked them why they wouldn't just go down the traditional path of becoming a traditional admitted insurance carrier. And clearly they misunderstood the capital requirements and how that all worked. So my financial team followed up with them to explain that all in writing and direct them and how that all works, that if they chose to go down that path, they could do that, and we were there to help them do that. I will comment that in the meantime, too, we have encountered some other situations. One in particular I may have shared last time I was with you, but we learned of it through an op-ed in our Oklahoma City newspaper, where there was an op-ed about some changes that they thought should be made in the captive insurance space. And it was signed by this tribe in Oklahoma. It was signed by their insurance commissioner. I read that, and I thought I was the insurance commissioner, but who knew? But anyways, we then went out to investigate that, and our fraud unit went out, and I think clearly what we have happening there, and probably in some other situations, is some, I'm not ready to quite call them bad actors, but folks that are taking advantage of tribes, and that tribe is involved in name only. They were clueless about insurance. I think some group based out of another state, not out of Oklahoma, had gone to them, and this idea, hey, we can operate as a sovereign nation, start our own insurance company, we'll funnel X percentage of the money to you, and you're really just kind of lending your name. And I'm pretty sure that's what's happened here. And so we're investigating a number of different things at the local level there in Oklahoma, but I think it's just sort of the tip of the iceberg on this issue. So I think that was about it on my update there. Happy to take any questions.
But in most places, they have backed off of selling outside the tribal nation, or?
Yeah. When pressed with the cease and desist or other
Right.
threats of action, they that's what I'm saying. I think they're not looking for a legal showdown. They have backed off each time today. They've not pressed that. So we'll see if that continues. But they have agreed to only sell to tribal members, and that's a different issue.
Sure. Any questions from the committee on this? Okay, thank you. Next, we'll do an update on the draft NAIC Consumer Privacy Protection Model Law. The NAIC is working to amend its Insurance Information and Privacy Protection Model Act and its Privacy of Consumer Financial and Health Information Regulation, with the end result being a new NAIC Consumer Privacy Protection Model Law. Just last week, a new draft of the proposed amendments was released, and they can be viewed together with the cover page on the website and our app. Also, on page 217 of your book, in your binders, is the cover page to the first draft of the amendments. Can you provide us with an update as to what the comments have been like thus far, a summary of the latest amendments, and what the timeline for the next draft is possible adoption? Amy, are you doing that? Okay.
Good morning. So I'm here to give an update on the Private Protections Working Group's Consumer Privacy Protection Model Law. And as you said, there is a second draft available on the NAIC's website that is open for comment until July 28th. So I'll do a little bit of a summary of what the working group has done since we last met. The comment period for the first draft closed in April, and the working group reviewed the written feedback it received and held public calls and a few meetings. And the feedback that was received on the initial draft, it included some industry concerns with the model being too overly burdensome to the insurers and licensees. It had an opt-in provision. It requires prior consent from consumers for marketing purposes, and there were concerns with enhanced third-party oversight, consumer notices, and concerns with the timeline for deleting personal information. So last month, the working group held a 2-day in-person meeting in Kansas City, and they considered all of these comments and concerns. And it looks like they discussed providers, the definitions of insurance transactions and other permitted transactions, marketing, joint marketing agreements, marketing consent, and the content and frequency of consumer notices. So the working group has met in regulator-only sessions 7 times since June 22nd. And on June 26th, that's when the second version was exposed for a comment period. So with the updated draft, the working group is trying to take into consideration the feedback it received and wants to keep an eye towards uniformity and consumer protections. The working group's going to have a public call on July 25th to discuss the changes and receive additional comments. And the goal is to have the model ready for consideration for adoption by the H Committee at the NAIC Fall National Meeting in Orlando. So to date, the working group has met multiple times and intends to meet publicly at least 5 more times before presenting to H Committee this fall. And we welcome the conversation and your thoughts on this draft, and we're happy to assist you with getting involved or, helping to provide the documents on our website.
Thank you, because of all the bills, I think this is the one I hear the most concern about just in my conversations with people. Representative Lehman, you had a question?
Yes, thank you, Madam President. I find it interesting that when we start the data privacy, they give that issue to my commissioner. I think that was so that I'll be nice. I do respect the process you've gone through. I still have some concerns with the issues you pointed out from the first draft. I don't think were truly really addressed in the second draft. The third party language, the notification of clients to opt out for marketing, scrubbing our clients every 12 months when we have retention requirements elsewhere that require to keep us longer. But I want to ask kind of an overarching view of all of this, and that is, and I know NCOIL is going to, I'm going to work with Will, we'll come up with some comments, but the one suggestion I would have is we just passed, I think many states have passed, data privacy laws. I think there's maybe 50 or 60 states now that have passed the Virginia model, they got the Colorado model, California model. A lot of these are out there to kind of set the stage for the federal government to get involved and set a universal standard across all jurisdictions. Because the problem you have now is if I'm operating in multiple states, I've got to comply with multiple data privacy laws. So are we going down a path where what we're going to want to implement here might be somewhat of a moot point? Because it's not, I know we regulate insurance on a state level, but as we passed Senate Bill 5 in Indiana, we had conversations about that, we exempted out the entities that were part of the Gramm-Leach-Bliley Fair Credit Reporting Act, and that falls to the majority of insurance. So, and we've quasi, exempted out of our statutory data privacy laws those entities, and now we're kind of bringing them back in through a regulatory model law. So I foresee conflict with moving forward with the feds, moving forward with states, and then the NAIC saying, hey, we want to adopt by fall kind of this model law that we want to bring back to your states and then implement, because I think it's going to be a heavy lift in our states when we're waiting to see what the feds are going to do, and we've already passed privacy data that kind of goes contrary to some of this. So I know your comment period is closing quickly. I guess we'll provide something from NCOIL, but kind of in the general sense of, is there any discussion all about maybe kind of hitting the pause button just to see where we end up in the next 12 months?
So I would say, well, first off, I hope that it did work, that you are Indiana's legislator and I'm your commissioner, and we'll keep it nice here. But what I will say is that
Amy and I have a wonderful relationship, by the way. We get along great in Indiana.
So I'm not aware of any considerations to push pause. However, I'm sure that the NAIC, especially the working group and then the chair of the Age Committee, they're always open to receiving feedback and comments. And so that's something that could be incorporated into the comments that you mentioned NCOIL might provide, and that will be taken under consideration. And then some of the consumer protections that are being reconsidered in the second model include trying to limit who's affected by the model. So, for example, third-party service provider has been refined and won't include an affiliate, for example. And so there are some modifications to try to limit that overreach. I know that at the federal level, the U.S. House Financial Services Committee approved a vote that would amend Gramm-Leach-Bliley Act to give consumers more control over their personal information, which is similar to what this model law would encompass. And so the NAIC has not taken a position on that federal bill, but we continue to monitor it, and if necessary, we will be able to make comment. But as for this working group's draft, there are several more meetings in the works between now and Age Committee for the group to consider what comments they receive back.
Representative Metzger, you have a question?
I think I have to hold it, okay. In looking at the model law, I haven't followed the process and procedure as we go forward. It seems to me, I sit on insurance and I chair commerce, and privacy is a major complaint at the state and federal level about consumer privacy, but the harvesting of the data in many cases used and sold to reduce the cost of various services that are provided. You know, I can understand within insurance why you want your privacy, and in various areas I think there's different levels of security. It seems to me that one of the procedures in terms of both public hearings and raising model legislation, I'm not sure if we should be thinking regionally on floating the model legislation in a legislative session in neighboring states, come back with feedback from those neighboring states to then further work on the model legislation so that we have public hearings and we begin to get regional associations for those model laws. I'm wondering what your thoughts are on that, and if that is, whether that's the procedure we follow now, and we've considered that, because as you begin to try to bring a national platform on insurance legislation, it seems if you bring it at the regional level, you might be able to get better coordination, more impactful changes that suit, whether it's the West Coast, the East Coast, the center of the states, and I don't know if we've used that procedure before, so I throw that out as a question to you.
And maybe, go ahead, Amy.
So I was going to say that I think that we're open to any innovation and innovative ideas for being able to move forward with any of the models that we're drafting, including this one. And so it's not something that I'm aware of that we've considered before, but I am, like I said on the comments that you might have on the second draft, this might be something to float around to see if that's the approach that would be effective in adopting this going forward.
Okay, thanks.
So perhaps I'll just jump in just to put maybe a finer point on a couple of items. Remember that when we started the process, we were trying to prevent federal preemption. That appears to be not necessarily what will happen. So now the NAIC, which isn't known for operating too fast, Representative Lehman, so I appreciate the compliment that we might be moving too fast, but now we're trying to have a very thoughtful approach and process as we develop. Mostly our focus is on protecting consumers and making sure that their information is appropriately protected. We're all just in the wake of a very large data breach, won't say the name, but impacted several companies. I just got a call last week from a company in my state who thought that they were free from being impacted. Now they find out that the reinsurance company that they bought reinsurance from is impacted, and they might be indirectly. So I think, first of all, we'd love for NCOIL to make comments on the model that's being drafted. As to whether or not there will be a pause or not is still up for discussion, depending on if it's reached the point where there's consensus that it's good enough. As far as the regional approach, we've never taken that type of an approach. Maybe not a bad idea. I do know that a lot of us, as we've considered passing model laws, have looked to other states to see, and sometimes it's not the natural region that you belong to. For example, there's nobody here from Oregon or Washington, but Idaho probably wouldn't follow them. We might follow Montana and Wyoming and Utah, be more in line that way. But when we started looking at it, we started looking at what the Carolinas had done and what some of the other states that are similar minded might approach. So we're open to suggestions that you have. We need your input and suggestions on the Model Act, so we'll look forward to seeing those.
Madam
Representative
President.
Lehman, you had I'm sorry.
No, go ahead.
I kind of want to throw back to you guys, if that's appropriate, just a question. I know in some past meeting there was discussion about NCOIL developing a model. I'm assuming from this discussion you've laid that aside, but has NCOIL taken an official position on HR 1165, or an unofficial, just kind of would prefer the federal, or what's?
No, not officially, no.
And maybe to that point is, I think, Dean, you said something that we 100% agree with, and that is oversight. We want to keep state-based regulation. So the genesis of this was to make sure the feds don't get involved. I do think this is maybe an issue, and we've offered this in the past, and I'll offer it again, and I'll offer myself as well, is to bring us into those conversations. I know we're not on your different committees, your subcommittees, but even just, I'll come out into Kansas City on sometime during the week and sit down and walk through what this is going to look like when we get to the actually legislative side of all this too, because I do think this is a kind of an all-hands-on-deck approach to, because as we've heard, data privacy is what's driving the conversations around everything today, is what are you doing with my data? I do think, as we looked at it, it's being geared to more the ones we just don't know. I mean, insurance companies are very transparent, as they're heavily regulated, as are banks, et cetera. It's those unregulated kind of industries, the Facebooks, the social media, those people who are collecting massive amounts of data, totally unregulated in a way. I think that's what's driving this whole privacy discussion. So I don't know that insurance needs to get too far ahead of their skis on privacy when we're already heavily regulated. But I would offer NCOIL's assistance in any way we can to be a part of that, moving forward with that process. And I'll offer Deborah to go to any meeting you want her to go to.
If we would love to have Deborah come to any meeting and love to have you both involved, and I think it was important. I would just indicate to you, so it's not been too long ago, we had a fairly significant breach on a fairly significant company, and it was a ransomware breach where the company, in spite of the federal government telling them not to pay the ransom, told us that they had to pay the ransom or they would cease to exist as a company. Now just think about that for a minute. So that's not only, you think about the hundreds of thousands of policyholders who would be impacted. You think about the state's economic situation that's impacted based on that ransomware. And you think about how that then impacts the guarantee funds and all the other companies that it creates an issue with. So it's super important. It's super important that we be thoughtful, super important that we get it right, and we welcome the collaboration with you on it. So
I do have a question. The model bill is financial and health, and of course there are already so many HIPAA restrictions on healthcare providers. There's all kind of privacy issues already addressed. What does your model bill do with health that's not already being done with existing HIPAA regulation and those kind of things?
So in the second draft, there was, I guess in the first draft, there was a discussion of HIPAA and high-tech compliance, and there were some concerns with that. And so that was under consideration. And I guess, in a late June meeting, the group exposed some comments related to that. And so the second draft is really looking at those specific consumer protections where the comments were made. And there needs to be compliance with HIPAA and high-tech in the current version. But it's up for consideration, like Commissioner or Director Cameron said, is that we welcome collaboration, and I want to walk through all of these issues to make sure that things are fully fleshed out and make sure that we're collaborating between NCOIL and NAIC, because, as you said, you are the legislators who will be enacting this possibly in your states, and so you know the practical implications of some of these provisions. So I welcome the discussion.
Any other questions from the committee or comments? Oh, yeah, please.
I guess I'm going to speak on behalf of the small insurance agents. I'm one of them. Obviously, seriously, being able to, I guess, have that conversation with you guys because of what we have to go through as far as that mom and pop insurance agency. So there obviously are some concerns, and I really appreciate you making sure that we do have a voice at the table before the final draft is out. But obviously, just making sure that we do not handcuff ourselves in a lot of ways. Obviously, this is a huge topic of protection. We get that, but also some consideration of the small insurance agencies.
Absolutely. I agree. And we worked in Indiana on the cybersecurity data model law to make sure that, producers and independent agencies were carved out of some of the more burdensome protections in there that would disproportionately affect them and still provide enough consumer protection to make sure those changes weren't going to adversely affect consumers. So I think the same considerations in this draft can be taken under consideration as well.
And if I may, Madam Chair, I just want to echo what Commissioner Baird just said. And I had a meeting just in the hallway with Wes before this meeting started, urging concern for the independent agents in the process. We are one of the states, I think it's now, 15 that have adopted the Model Act, NAIC Data Security Model Act. We did so with lots of input from our agent force and with their approval and support of the final version of our Data Security Act. So we're mindful.
Any other comments or questions from the committee? If you look at your agenda, we're actually going to move the next item on artificial intelligence up because it does sort of, there's a lot of commonality with the Privacy Act. As we all know, we've seen this unprecedented growth in AI across all types of industries, but certainly we want to look at it for the insurance industry. As AI relates to NAIC, your new H committee is considering developing a model bulletin outlining the regulatory framework for the use of AI for the insurance industry. Can you share with us some of the details as to what the bulletin might look like, when it will be exposed for comments, and what kind of timeline for adoption?
Absolutely, thank you. So the Artificial Intelligence Model Bulletin, currently there is a draft that is exposed out there. It was exposed on July 17th, and the NAIC wanted to make sure that this bulletin was not just a product of a working group or a silo of the NAIC, but that it was a work product of the entire membership. And so I guess back in, the timelines kind of flow together, but earlier this year, the commissioners met and determined that there was consensus that the NAIC should move forward with developing an artificial intelligence regulatory framework for use by the insurance industry. And so at our fall meeting in December, the H Committee announced that the regulatory framework would take the form of the bulletin. And so the bulletin is supposed to be principles-based, not prescriptive. It should prioritize governance, protocols that rely on external and objective standards, for example, those used by NIST. And then there is validation and testing of AI, which there are certain practical limitations to testing, but we wanted to make sure to include that function in the bulletin, and it stops short of requiring data validation by the insurance regulators. It's the responsibility of the licensees to conduct due diligence on their third-party data and third-party data vendors. So it really is a more principles-based document that outlines what the AI and machine learning protections are, and it is corporate governance and transparency standards that are in place for a lot of insurers already, and it's just codifying that into one document, and it heavily reflects some NIST documents, so we wanted to work within that sphere and not work in a silo where we are just all trying to learn about AI And, you know, we have had many education sessions on what AI is, what machine learning is. We've had industry discussions, we've received comments. And so there was a small group of insurance commissioners that were a part of a drafting working group that then produced this draft for the entire membership to review and comment on, and that's where the product is today, for review and comment. The comment deadline is September 5th, and initial comments are going to be heard and discussed at the upcoming summer meeting in Seattle.
I mean, for those of us who aren't familiar, you want to tell us who NIST is and what they do?
Excuse me, could you repeat that again?
Yeah, explain a little bit about who NIST is and what they do.
Can I just, NIST?
Oh, NIST. So NIST is the National Institute of Standards and Technology, and so they put forth, you know, standards and best practices for technology uses, data security, things like that. And so they have released recent guidance on some of the related issues that we look at when we are looking at AI and machine learning that are, you know, the gold standard for use within multiple industries.
Apologies, the way the sound system's set up, I think it was just difficult to hear you there. We weren't-
Oh, Matt, I know you've got to have a comment on this transparency of AI. Surely.
Yeah, and
You're fine. Oh, okay.
And Madam President, just to maybe, there is an echo here, so we're.
Oh, okay.
So if we're getting a reverberation, it's sometimes difficult. I just thought I'd make a comment. It was 2 years ago at this meeting, I think Commissioner Mulready and I sat at this table and announced that we were coming up with the H committee. It was first because we were proud that we were making that progress, but secondly, we wanted to see how quickly the industry would get back to your cousin to let us know that we had announced it publicly before it was ready to be announced. But and the industry did very well. I didn't leave the meeting before Mike Considine was calling me. So, but secondly, it was in our last year's, we had an extra commissioners conference as we tried to work through our strategic plan. It was in that meeting that we decided that a model act was not what we wanted to do. We felt like the core of what we needed as insurance regulators, we had the authority to. But we wanted to give sort of a bulletin of best practices, what can be done. So we'll certainly, I know we'll get a chance to review it. We certainly would take your feedback and suggestions to us on that as well, as that's a work in progress.
Any other? Oh, Senator Hackett? Whoop. Oh. Oh, okay.
Bob, can you come to the mic in the middle of the room?
And the governor was the attorney general at the time, and we had interested party meetings. The only thing that and I love NIST, but NIST, when you look at NIST, it's huge. And what we did is that we brought all the industries in because each industry was good, so we wanted to take how the NIST principles and standards applied to different industries. So you have to be really careful if you use all of NIST standards because that's not the way NIST was set up. So that's the only thing that I like NIST. I'm not criticizing them, but you got to realize NIST when you look at them, they're really involved and have a lot of standards, but a lot depends on when you bring in all the different industries you set up because different industries, and one of the things we wanted to do was protect businesses in major lawsuits, and we didn't want to run the small businesses and create premiums that were unbelievably high. So we created a really good bill in Ohio that we think we protected companies from major lawsuits. But we needed the associations involved of every industry because then they had to adhere to the same standards that NIST, but not all of NIST standards. That's the thing that you got to be really careful of is NIST is very, very, I mean, a lot of people here don't know NIST. When you study NIST, it is very, very involved. And I think the people, if you guys have studied it, it's really involved. So that's the only thing I'm being careful to tell you, be wary of that. But make sure it fits with the different industries under that you don't create a standard thing that just, taking the NIST principles that may not apply to certain industries because you'll run away the small companies. That's the only thing that I say to you under that scenario, because we did a lot of time and a lot of work on that. So, but thank you. But that NIST is very good, but it's very, very big. Thank you.
Thank you for that comment, and I would agree that NIST is very expansive and comprehensive, and I do not begin to, purport that I'm an expert on NIST, but I do know that we looked at the NIST principles, but also other artificial intelligence guidance or other standards that were implemented by maybe regulators of other industries or other industries or countries that had, started the process of adopting basic standards for the governance of AI and machine learning. And so we took into consideration multiple industries' drafts of other principles, and that was part of our educational review when we were looking at, learning about AI, machine learning, and looking at other industries, as well as, the federal government and what they have implemented and whether we want to go that route or not.
Megan, you have a question?
Thank you. I'm very interested to see how you incorporate NIST and all of these different guidelines into the AI standards that you're looking at. One of the things that NIST has really been focused on lately is branching off of AI and even going into quantum computing because of the potential, but also both the potential for good and security breaches that this unregulated market has around this hugely expansive potential around quantum computing. So I'm really curious how you might be analyzing that alongside your AI standards.
And just to clarify, sorry for the hearing and the echo, I apologize. Were you saying third party? How it compares to
No,
third
so I was
party?
curious if you're incorporating quantum computing into your review as you go into the AI algorithms, because that's really the next horizon that has even broader implications than what AI currently is anticipated to.
So in the bulletin, it does have a few definitions, and part of the definitions include different phases of machine learning or different, schools of thought. And so it doesn't go into those theories specifically, but it does make a reference to them to make sure that we are inclusive of, what is the newest technologies out there.
Okay, seeing no further comments, I think we'll move on to item 5 now. Discussion on NAIC's Public Adjuster Licensing Model Act and development of NCOIL's Public Adjuster Professional Standards Reform Model Act. Tomorrow, our Property and Casualty Insurance Committee will begin discussions on the development of an NCOIL Public Adjuster Professional Standards Reform Model Act sponsored by Kentucky Representative Mike Meredith and Indiana Representative Matt Lehman, NCOIL immediate past president. The model comes on the heels of several states recently enacting public adjuster reform laws. Before we go any further, I'd like to offer Representative Meredith and Lehman to provide any remarks on the model, as well as the actions they took on this issue in their respective states. We understand that many years ago, NAIC adopted a Public Adjuster Licensing Model Act. Has the NAIC received any comments on whether or not the model should be amended in light of the recent activity? But Representative Lehman, you want to? We don't have public adjusters in Arkansas. I didn't even know what they were. So
I'll defer to Representative Meredith.
Well, I appreciate the
comment.
opportunity, and we're looking forward to bringing the model tomorrow in the Property and Casualty Committee. If you followed what has happened in Kentucky over the last few years, we have been hit by some major weather disasters. 2021, December of 2021, had a major tornado outbreak that affected the western sector of our Commonwealth, and then in that following summer in 2022, we had major flooding actions in the eastern part of the Commonwealth. During that time, we had a significant movement of public adjusters coming into the state, and were doing work that was actually just interfering in the claims process many times and slowing the process down. Some bad actors out there, and we didn't have a law that was strong enough to handle that. And so we acted working with the insurance industry in the state and working with our commissioner, Sharon Clark, there in Kentucky to strengthen what had been based on the NAIC model probably about 20 years ago in Kentucky, to update how Sharon can regulate those folks in the state and deal with those bad actors.
Well, and like I said, we don't have them in Arkansas, so I didn't even know what they were. You might just tell us a little bit of what they do when disasters happen.
So they will sign a contract with the insured to come in and help them through the claims process. And what we have found was some were going as far as harassing the staff adjusters with the companies who were in trying to do their adjusting work. We had some that had conflicts of interest with maybe a roofing company that they worked along with and had a financial interest in, who were trying to up those claim costs, or who were maybe involved with a restoration company or something like that. And so there were conflicts of interest issues that we wanted to address. But most importantly, we just wanted to make sure that the disclosure and transparency in those contracts and the ability for the insurance commissioner to regulate them properly was there.
So is the problem the public misunderstands when they call them that they're the insurance adjuster? Is there lack of proper identification?
I don't think it's a lack of proper identification there necessarily. I think they come in and they sell the client that they can help get them more money out of their insurance claim. And the client may not know all that's going on. It may be an elderly person who has not dealt with the claims process before, and they think, oh, this is somebody who's going to help me. But they're also getting a fee out of that claim as well, which becomes an issue in trying to mitigate those losses.
You have any comment, Matt?
Yeah, I'll just say what you have in front of you from what we're proposing as the Model Act is kind of a combination of the Kentucky law and working with our department this year. We passed in Indiana some pretty restrictive public adjuster laws regarding conflicts of interest, the inability for them to file complaints with the department, where our department was being overrun by complaints that were being filed consistently by the adjuster, not by the insured. So we prohibited that. So I think you guys, the NAIC's model was back 2005 or things like that. So hopefully we can get some good statute on the books, get a model out of here that maybe as you guys update your models, that you can use this NCOIL model as a pretty good draft. And I think Representative Meredith was very, very good on laying this out, because what we saw is there was some, should we just have a ban on public adjusters? That Arkansas doesn't have them. We also have to be very clear that there are sometimes some carriers who are not always the most easy to deal with or the best to deal with. And so I said somewhere between, that I come in and basically become the wedge between the actual adjuster and the client, which we don't want. There's also, you can't come in and rebuild my building with, balsa wood and straw and then say we're done, right? I mean, so there has to be somebody protecting the interest of that individual. So there's a need, but the need was going to the point of where I think they were very aggressive. And so regulatory, 5 or 6 years ago, we in Indiana passed language to make them licensed and answerable to the DOI and some things like that. So I think it's in a good place. I think it's a good model, and I look forward to input from NAIC.
Yeah, I guess my question, does NAIC have any plans to update their model, or have you re-looked at that issue? Or
We do, Madam President, and if I may, NAIC really appreciates NCOIL's attention to this issue, in particular those of us from coastal states. I've had 800,000 claims filed from hurricanes in the last 2 years, and needless to say, this is a really important issue for us. As we've seen from recent news stories, bad actors can and have taken advantage of policyholders at their most vulnerable time. Mitchell Adjusting International in Texas is accused of stealing $7.9 million from policyholders in various states. The NAIC recognized this need nearly 18 years ago when it adopted their Public Adjuster Licensing Model Act number 228. Today, nearly all states require public adjusters to be licensed. South Dakota, Arkansas, Arizona, Alabama, and Alaska are the four that do not, and 20 of those states that do have implemented the NAIC model. One of the key differences between the NCOIL draft and NAIC's model is that NCOIL's model establishes fee caps for non-catastrophic claims at 15% and for catastrophic claims at 10%. The NAIC model leaves a fee cap optional to the states, but it does suggest that fees for catastrophic claims be no more than 10% of the insurance settlement. The NAIC is contemplating opening up the Public Adjuster Model Act for revisions to enhance consumer protections and strengthen requirements for public adjusters. Another related issue we've seen in the market that we'd like to address is the assignment of benefits or rights to property repair contractors who do not have legal authority to represent an insured. And in fact, in our just concluded session back home in Louisiana, we passed that exact ban. Delaware has also done it in a year before. The NAIC model is similar, significantly similar to ours in Louisiana with a significant exception. We passed our law the year I was president of the NAIC in 2013, and the Bar Association, the Louisiana Bar Association, took on the public adjuster industry seeking licensure that we were supporting, but we stepped back from the fight between the attorneys and the public adjusters, and we are the only state in America that prohibits any contingency fee arrangement between a public adjuster and their insured, on the basis that it's actually contingency fees are limited to the practice of law and not available to public adjusters. That has been priority number one in my state for public adjusters to repeal that. And they did a bill, not this past session, but the year before, to adopt the model with a 10% contingency fee cap, which is pretty much the standard around the country. And it cleared the Senate almost unanimously, got hung up on a tie vote in the House in the last days of the session. Industry was very opposed to removing that prohibition on contingency fees and were successful. In addition, the NCOIL model adds a requirement that clients' funds be handled by a public adjuster in a fiduciary capacity and maintained in a trust account, similar to what's required of lawyers. The NCOIL model adds additional protections for the insured to ensure that public adjusters act in good faith in promoting access to the insured, the property, and information related to the claim. We have language in our statute guaranteeing the insurer has direct communication rights with the insured, but the NCOIL model is even more defined than that, and we compliment you for that. I did have an issue in my state with a surplus lines writer out of Tennessee coming with a policy provision that prohibited the use of a public adjuster. And frankly, I pushed back on that, but was overruled by our Division of Administrative Law. So we went to the legislature in this just concluded session and passed a bill guaranteeing the right to a public adjuster, but for residential and maybe, I think maybe, small commercial as well. Don't quote me on that one, but I know residential is guaranteed now. So NCOIL's additions are certainly good for consumers, especially the addition of the public adjuster's defined fiduciary capacity and trust accounts, considering the amounts associated with many of these claims. And with that said, I'd be happy to answer any questions.
Any questions? Okay, if not, we'll move on to the Federal Trade Commission issue. As you know, the FTC has been very busy recently engaging in rulemaking activities that can arguably be described as outside the FTC authority and encroaching on the state-based system of insurance regulation. Two examples are a rule pertaining to non-compete clauses and a separate rule pertaining to service contracts. NCOIL submitted a comment letter on the service contract rule, which can be found in your binders on page 242 and on the app and the website. Has NAIC been monitoring these issues, and if so, does it view the FTC activities here in the same manner that we do at NCOIL?
Thank you, Madam President. Your language is encouraging because our frustrations as well with the FTC. And just a little quick background, in May we sent a letter to DOJ and the FTC looking for an update on some of these antitrust investigations on health insurance companies, PBMs, and improper marketing of health insurance. You know, the rules state that they will keep us up to date. Unfortunately, we have not heard a word from the FTC on any of these, not a single response. And then in polling each state regulator too, not only have they not communicated with the NAIC, but they haven't communicated with any of the state regulators, which is part of that process or supposed to be. We recently formed an improper marketing of health insurance working group that is quite active in pursuing that exact thing. And something that they're now going into is lead generators and sort of looking into those as well. But unfortunately with the FTC, we've had no cooperation or collaboration on that issue. So little background. The non-competes, we're certainly familiar with it. I think from the NAIC perspective, we did not submit any comments on that proposed rule that just came out this year. We're monitoring it. We're questioning whether they have the statutory authority to do so. But basically, again, just to kind of keep it short too, I think that we are just monitoring. We have not submitted comments, and we are monitoring that non-compete. And as well on the negative options component there with service contracts, I know you guys, I think, submitted a letter. But we have not submitted comment and on the proposal, but we're just kind of continuing to monitor that as well.
Any comments or questions from the committee? I know we're getting kind of short on time, but we did add 2 items, and I do want us to cover those because particularly the next one I think is important to me. Discussion of the proposed healthcare regulations. As you know, some regulations were recently issued for comment that deal with things such as short-term limited duration plans and hospital indemnity or other fixed indemnity plans. NCOIL will likely weigh in on this in some manner, but we're curious what NAIC thoughts are on the proposals, not so much from a policy perspective, from a jurisdictional perspective, in terms of federal encroachment on the state-based system of insurance. You want to take that, Dean?
Sure, I'll start, and maybe others will want to jump in. Certainly, we are still trying to digest what the new rule has in it. There are a number of components that we have concerns with. Just as a reminder, in 2016, the NAIC did send a letter in opposition to the rule that was proposed by President Obama, limiting short-term limited duration plans from 12 months down to 3. And I think we were part of the stay on that effort. And of course, under the Obama administration, we had heard that they weren't going to enforce it, so a number of us did not. A number of states will be looking at it individually. I know, for example, in my state, we have not only short-term limited duration plans, but we also have what we call enhanced short-term plans, which are really the equivalent of ACA plans. They are, by ACA's own standard, they are the equivalent of a silver and a bronze plan, meet all the 10 essential health benefits, and allow for people to convert over to an ACA plan should they desire. We require that the carrier offering those plans also be offering on the exchange, so there's an easy transition. CMS has said to us they like our approach and they'd like us to make the comments. Obviously, the current rules don't don't meet with that. So we'll be making comments. I'm sure other states who have followed and done something similar will as well. And I wouldn't be surprised if the NAIC doesn't make some comments as well. I think for most of us, we believe that individuals are better when they're insured. And so we want to encourage folks to have coverage. And the short-term plans have a role to play in being able to access coverage. In many cases, they help with the early diagnosis of some of the significant health issues that people may have, and if they're convertible or they can transfer over to ACA plans, then they're not harmed. In our state, in spite of our enhanced plans effort, we really only have about 7,500 to 8,000 people that have enrolled on them, as compared to those that are enrolled on the ACA plans. It's less than 10%. So not a significant impact to the ACA plans either, as maybe some might surmise. So it certainly was an item at our discussion at our commissioners' mid-year meeting, and will be an item in Seattle again as we work forward and submit comments. We'll be happy to share our comments with you, and look forward to seeing yours as well.
Yeah, and certainly I have a question. You want things to be seamless for patients when they're moving from short-term to, I like the ACA. Is it really seamless? Is there a continuity of care when they transition? Do they have to get a new prior authorization, get new medicines approved? All of is it really seamless transition? I guess is my question.
So, Madam President, in our state, it is seamless and is required to be seamless. Not every state may not have that, and many states have, this is why we have state-based regulation. I have devised what works in my state. It may not be what will work in Oklahoma or in Minnesota or wherever, but I think that's the benefit. We are the laboratories of innovation, and we get to try certain things on and replicate each other, and try and find solutions that people can have coverage. So.
Comment, Glenn?
The only thing I would add is I think that, trying to come together with 50 states on a specific position on that sort of thing is extremely difficult. Right now, we are receiving comments from all states. We will submit a comment letter prior to the September 11th deadline. My guess is it would be limited to, as it was in 2016, that we're opposing it from a standpoint of it's an arbitrary position with 90 days, and it should be left to the states. My guess is that would be our position.
And I will say, we sent a letter in 2016 as well. Yeah, you have a question, comment?
So I just also wanted to add one other issue that is in that rule that we're all trying to decipher, and that's the tax implication that is imposed in that rule, which says that consumers will be taxed if they are given this sort of benefit through their employer. We're trying to figure out the authority and how that all works, and so that may be another issue that we'll want you to weigh in on.
Thank you. First of all, thank you all for saying, at least putting it up to the states, because every state has it differently. If it's helpful, I have an article that just came out that I co-authored that was picked up by Forbes and others on short-term limited duration plans, and actual clients who have had them, who had $100,000 worth of claims and only paid their $2,500 deductible. Mostly middle-income people who don't get a subsidy on the exchange are the folks who take the short-term limited duration plans. It's only going to harm them if they only have the 3 months. So I'd be happy to share any of those stories with you if that's helpful. Thank you, Madam Chair.
No other comments. We are running up on lunch, I know, but we did discuss this with the commissioners at breakfast, but I do want you just to kind of do a little explanation to the full committee about the Evaluation of Securities Task Force, the SVO, and the process that you're going through. what happens, you can tell they evaluate a security, and then the SVO looks at the security rating and may, as a result of that, change the rating.
No, they're not going to talk about it.
Oh, they're not?
Follow up with other
Oh,
discussions.
we're not?
Yeah, no.
Oh, I thought we were going to discuss it
No,
here.
no.
Oh, we're not?
No.
Okay, he said we're not discussing it because we're going to lunch, but the NAIC is looking at the SVO and evaluating securities.
And we had a good discussion.
Yeah, we had a good discussion at breakfast. Okay, if no other business, we're adjourned.